Artistic, good to see how you doing. Evening, Miles. How's things? Things are great. Good to see you. How you doing? You're the first one in today. Good evening, Miles and CMF Free and Forever. Good to see you as well. How you doing? Hello, Miles. Mickey, good to see you as well. How you doing? How's things? I'm just trying to pin. Here we go. Hello, Miles. T, good to see you as well. How you doing? How's things, T? Okay, let's do intro, disclaimer, and what we're going to be talking about on tonight's live. By that time, everyone should be tuned in for the first part of the live. Now, sorry about that. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. Long time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, pretty much all the information you should know about regarding the world completely transforming into a digital space. We also do Q&As in this live as well, which means if you have any questions, put it down inside the comment section. More than happy to help you out. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 433 of the CMF Live Show. By the way, thank you so much to everybody who has straight away liked and retweeted this live show if you're watching this on X. Thanks so much to everyone also who has essentially straight away liked the live show if you watch us on YouTube. And a special thank you to everybody who also has put a comment outside the live as well. Now, on tonight's live, we're going to be talking about a few topics that are quite vital to know about. The main one, obviously, being that the government shutdown situation isn't going to be happening, and that's what essentially pushed the crypto space even, plunging further down. But it seems like it's been voted. We're not going to be having government shutdown by the looks of it, and Trump, all he needs to do is sign it. We're going to talk about that on tonight's live. We're going to talk about some perspective news on tonight's live as well from different essentially CEOs of where they think the crypto market space is headed or what particular tokens are heading towards what price points. So there's quite a bit of news to go through on tonight's live. But before we go through the first news, which is regarding a perspective from Bitwise's CEO and also regarding the government shutdown situation, let's go to the comment section first and then we go straight into the first news. If you haven't liked or retweeted, please like and essentially retweet the live show, CMF members. Now let's see where we were at. Hi, Miles. Good to see you. Carlos, good to see you. How you doing? Morning, Miles and CMF. I bet you're so happy to be back in London. And yes, London has its qualities, I would have to say, but the weather is not one of them. What's up, Miles? Good to see you. Shelly, how you doing? What's up, Miles? What's up, CMF? Kerry, good to see you. How you doing? Evening, Miles and CMF. How you all doing? I'm doing great, Joe. Good to see you. How you doing? Good evening, Professor Miles. Let's go funky, brother. Good evening, CMF. Let's go funky. Good evening, Miles and CMF. Manny, good to see you. How you doing? Hi, Miles and CMF. Hope everyone is doing good. Let's go, Ronnie. How you doing, brother? How you been? Now, Bitwise and the government shutdown situation. Bitwise essentially argues that the crypto is nearing the end of this brutal winter that we've been in stuck essentially inside the crypto space for a while now. So prices essentially have been falling since early 2025, masked by the institutional flows, but history suggests that the worst may already be behind us, Bitwise has come out and said today. Crypto winters are prolonged bear markets marked by essentially still steep declines, collapsing sentiments, and general indifferences to good news. Historically, they have followed periods of excessive essentially leverage and speculative excuses, lasting roughly a year from peak to essentially 12. Now, in past cycles, including 2018 and 2022, adoption milestones, essentially regulatory progress, did little to halt essentially the losses and the depths of the downtrends. Instead, crypto winters essentially have tended to end quietly as selling pressure essentially fades and market stabilizes, setting the stage for the next expansion, the post essentially said. This is not a routine pullback or a healthy correction, according to Bitwise's CIO, Matt Hugan, but 2022 style downtrend essentially driven by excessive leverage and profit taking essentially that has overwhelmed even a steady stream of positive headlines. Matt argued that recognizing the market as a true crypto winter essentially helps explain why good news from regulatory progress to institutional adoption has failed to lift prices. So for a while, I've been saying essentially inside the crypto space, we're getting so much good news, but no market movement. In fact, the market is essentially reacting negative to good news, which is quite odd. It's been happening for a while now. And according to the CIO essentially of Bitwise Exchange, it's because people have been profit taking even when there is good news, which essentially caused the markets to downtrend. I would have to agree and disagree with that, the easiest way to put it. Agree, yes, profit taking always happens inside the market space. It's 24/7 market space, and you never know when people want to profit take. However, blaming the markets going down just on the basis of profit taking from the retail section or anybody else is completely ludicrous, because we've had major manipulation inside the crypto space from market makers, from exchanges, also essentially from hedge funds, and the list goes on. We've also had essentially war scenarios, which added to the fear inside the market space. We've had some other essentially geopolitical scenarios. We've had the issue of rate cuts not happening. We've had multiple wars essentially happening. So there's been so many other reasons why the markets have taken a dump. It's not just because people were profit taking, and that's why good news didn't react so positively. It's mostly because when good news comes out, the house essentially decides to go the other way, which burns people out in terms of essentially their trades of leveraging the market upwards or downwards. In past cycles, Matt essentially noted that fundamentals rarely matter at essentially market lows. Crypto winters do not end with optimism or excitement, but with fugitive essentially as sellers are finally exhausted. While previous crypto essential winters have lasted roughly 13 months from peak to essentially their movements, Matt believes that this cycle effectively essentially in January 2025, even though the markets did not fully register it at essentially at the time, heavy essentially inflows into spot Bitcoin exchange traded funds, ETFs, and digital essentially asset treasury strategies helped prop up a handful of large institutional accessible assets, masking essentially a brutal bear market in a retail focused crypto. It's interesting, honestly, that they're trying to blame the downtrends we've been having inside the market space solely based on the retail section, because it's just not true. According to a report, assets with strong institutional support fell modestly in 2025, while tokens without ETFs or treasury demands suffered declines of 60% or more. Bitwise estimated that institutional vehicles observed more than 740,000 bitcoins during the period, providing essentially tens of billions of dollars in price support that may have essentially prevented far essentially steeper losses, which is true up to a certain extent. Again, regarding essentially ETFs, yes, ETFs did help Bitcoin, Ethereum, XRP, and a few other tokens to keep some momentum and not lose a lot of their momentum that they've essentially, had over the past few months, you could pretty much say. If we didn't have Bitcoin ETFs, Bitcoin wouldn't be standing as strong as it is right now. You might be thinking to yourself, Bitcoin standing strong, really? Well, we've had Bitcoin go from 60 to 5,000 before, so I would have to say it's still standing a bit stronger than it was before. Despite the gloom, essentially, the underlying story for crypto has maturely essentially deteriorated, according to Matt Hugan. Regulatory momentum, Wall Street adoption, stablecoins, and tokenization all continue to advance, even if the markets essentially are ignoring them for now. That positive news is building latent pressure, essentially, that could fuel a sharp recovery once sentiment turns, the report added. The House of Representatives also today very narrowly passed a funding package, essentially, with a 270 to 214 vote, meaning the government will reopen from its partial shutdown as soon as President Donald Trump signs the bill. That is exceptionally brilliant news, hence why the markets decide to go ever so slightly on the upside, about 0.1%, some tokens doing 1% up right now. Lawmakers will essentially negotiate further funding for the Department of Homeland Security over the next week, and half essentially, but other essentially major departments will be funded. The news essentially for the moment at least has halted a panicking, streaking essentially plunge in crypto prices today, which saw essentially Bitcoin and other crypto assets ever so slightly stabilize, you could say, up to a certain extent. But yes, we did get exceptionally great news essentially regarding the government not continuing some sort of a shutdown going forward, and that funding is going to be happening. That's brilliant news for the crypto space, brilliant news for the market space in general. And the crypto market space should start reacting more positively to this. But according to essentially the CIO of Bitwise, the markets aren't reacting reacting to good news as they should be, because people are still selling and they're blaming the retail section mostly on that matter. They haven't specifically said retail, but let's just be honest with ourselves. Now, Canada is what we're going to be talking about next on tonight's live. Before we talk about Canada, let's go inside the comment section first, and then we'll go straight into the Canadian news regarding the crypto sector and the regulations they're trying to process over there. So let's see where we're at inside the comment section. As I previously, this is live, which means if you do have any questions, go for inside the comment section. More than happy to help you out. So let's see where we're at. We were here, I think. Yeah. Good evening, Miles and CMF. Manny, good to see how you're doing. Hi, Miles and CMF. Hope everyone is good. Ronnie, good to see you as well. Hey, what's happening, my fellow crypto gang members? Good to see you as well. Martin, how you doing? Good evening, Miles and family. Hope you're all good and staying real. Let's go, Ian. How you doing? Evening, Miles and CMF. Jason, good to see you. How you doing? Good evening, Miles and CMF. Mike, good to see you. How you doing, brother? So if he's saying we're in a crypto winter, does that mean we're in a bear market? It's one perspective. I wouldn't consider it as the final outcome. Inside of a 24/7 market space that's quite volatile, doesn't have enough regulations to, stop the amount of manipulation inside of it. It's better to consider multiple outcomes, is what I would say. He's one outcome regarding a bear market situation. I've always just said we're stuck in some manipulation stage right now inside the market space, where a lot of exchanges, I'm not going to be naming them, dump on the market space on people when we need the markets to stabilize. Some exchanges choose that particular moment in time to dump further inside the market space. I think we've seen that happen on X. A lot of people are posting screenshots of these exchanges dumping on people when we don't need them to dump and we need the markets to stabilize. So calling it a bear market instead of a manipulation market is a bit of a stretch, I would have to say. Morning, Miles. Good to see you, John. How you doing? Now, Canada. As Democrats essentially inside the United States are still going back and forward on crypto regulations with the Republican Party, other essentially jurisdictions around the world are moving towards crypto regulations. One example, Canada. Canada's investment watchdog rolls out a crypto custody rules to avoid essentially another gray area situation. Zero, new digital essentially asset custody framework takes effect immediately, raising standards for crypto trading platforms as regulators push to reduce investor risk. In a bid to respond more quickly to crypto failures, such as the collapse of essentially other Canadian top investment industries, regulators rolled out a new digital asset custody rules, tightening standards on essentially digital custody assets. The industry-led Canadian Investment Regulatory Organization, the CIRO, said its new digital asset custody framework is designed to allow it to essentially respond more quickly to risk, including hacking, fraud, weak governance, and insolvencies that have left investors exposed in past incidences. Many of the expectations in the framework were essentially developed in close consultation with crypto asset trading platforms, and they're essentially custodians and reflect practices already in place. A CIRO essentially spokesperson told CoinDesk today, adding that the transition considerations will be applied case by case basis. The new framework also provides a balance between flexibility and risk management, supporting innovation while also ensuring strong investor protection, the spokesperson said to CoinDesk today. The collapse of the essentially Canadian asset custody service back in 2019 remains one of the most notorious failures in Canada's crypto history. With $123 million still accounted for, its CEO essentially died and customer funds were found to be essentially missing. Later investigations described the co-founder, essentially Michael, as allegedly being deeply involved in the exchange's operations during the period when misrepresentations occurred. Custody is one of the most critical points of risk in crypto ecosystems, said Alexandra, CIRO, essentially Senior Vice President of Strategies and Innovations and Stakeholder Protections. A central feature of the guidance is a tiered risk-based structure that allows firms to diversify and strengthen custody arrangements while maintaining robust investor protections. CIRO also said that it would treat emerging custody and cyber risks, repeated supervisory issues across firms, or shifts in market essential practices as early warning signs that expectations may need to be updated. If we see that expectations are no longer essentially aligned with how custody risk is manifesting essentially in practice, CIRO would update the framework rather than wait for a failure to occur moving forward essentially. Canada has taken a cautious approach to crypto regulations, bringing trading platforms under existing security rules and emphasizing investor protection through registration, custody, and disclosure requirements. More recently, the federal movements on stablecoins and an expanded oversight role for the Bank of Canada suggest a slow shift towards a broader national framework for digital assets. I would say yes, Canada is moving on a very slow pace when it comes to crypto regulations, but at least they don't have the hurdles as some other essential jurisdictions have around the world, where two political parties are just headbutting each other to squeeze past regulations for the crypto space, and i.e., in other words, the Democratic Party and the Republican Party. CIO, essentially a self-regulatory body that sets standards for investments, dealers, mutual fund dealers, and trading activities in Canada, essentially possessing the judicial authority to investigate misconduct and enforce disciplinary essentially actions, including fines, suspensions, and permanent bans. So it seems that Canada wants to move forward in terms of crypto regulations. They are essentially trying to look for ways on how to protect people essentially when it comes to custody of their crypto assets, which I think is a brilliant idea. And essentially, we should be getting more regulations this year from all types of jurisdictions around the world at a much more faster rate. If we want the manipulation to stop inside the crypto space, not fully stop, but essentially control manipulation in some sort of a way, regulations is the way to do it. And as long as some jurisdictions around the world are still stumbling upon regulations or headbutting each other in terms of politics, politicians headbutting each other, other politicians, and coming out with regulations, it's just time wasting. The more they're doing that, the more people that are getting hurt in the middle. Now, moving on from Canada trying to advance their crypto regulations, which is a brilliant idea, to digital wallets. Before we talk about digital wallets that we just talked about regarding Canada, this one's regarding America. Let's go inside the comment section first. Let's see what's happening there. And then we go straight into the next news, which is regarding Franklin Templeton's perspective on digital wallets. Let's see where we're at. We were here. Morning, Miles. John, good to see you. How you doing? Good evening, Miles and CMF. Lena, good to see you. How you doing? John says, with the Clarity Act, are you on the side of Brad to just get it done, or Coinbase not until yields are sorted out? And how comes Coinbase all of a sudden has such a big say on the act anyway? Good question. Which side am I on? Brad's side or essentially Brian Armstrong's side, which is Coinbase? I would say I'm on Brad's side, because I want this regulation to get over with. Because if they're going to keep on going back and forward, it's going to take 25 years before we pass one regulations for the crypto space. So I'm on Brad's side regarding just pass it through. Also, why is Brad essentially just saying, let's just pass it through? Is because XRP has clarity. So passing essentially the Clarity Act just through helps XRP tremendously, I would have to say, because XRP has clarity, and the Clarity Act not only brings clarity towards crypto space, but it also brings clarity towards the SEC, the CFTC, the banks, and the institutions on what they can do inside the crypto space. It's very positive for XRP. So I understand why Brad is saying, let's just pass it through, because XRP has clarity, and then the banks and institutions want clarity next on what they can and can't do. So there's no more gray areas and lawsuits. So I would say I'm on Brad's side on that matter. Regarding Coinbase saying, yields, and they're trying to fight for that, why not? I mean, it's an argument of both sides. I understand why essentially Brian Armstrong wants yields on stablecoins. And I also, I kind of understand why banks don't want yields, because they're going to lose a massive client base. But it's just going to take too long to go back and forward. It's becoming the whole Republican versus Democrat scenario. It's just going to go back and forward for too damn long, and we don't have time. We want to get things rolling. So I'm on Brad's side. And regarding why does Coinbase have such a big say, they really don't have so much of a big say. So the people that are invited to discuss crypto regulations are essentially Coinbase, Ripple, Kraken, and Tether. Essentially, they were the ones invited to have this discussion regarding essentially stable coins and regulations inside the United States. So Coinbase is not the only loudest voice in the room. There are 4 other CEOs that also have some sort of voice in that room as well, I would have to say. But yeah, I'm on Brad's side. Let's just get it over with. Look, if the banks don't want to give up the yield scenario, then let them have it. Let's just move forward, get the ball rolling, get some utility and get some regulations. And then somewhere down the line, if you want to add something to the regulations, go for it. But let's just get the ball rolling. So I do agree with Brad on that matter. Because if we're just going to go back and forward, it'll take 30 years before we get one regulations coming out. And I also understand why Coinbase is doing this. They're not doing it because of, their own, because they care about the crypto space as much as they say to do. They're doing it because Coinbase offers USDC. And if they want USDC to be appetizing, let's say, to the wider crypto space or anybody else joining the crypto space, then offering yields makes it a much more appealing, essentially, offer than just holding US dollars. So that's why Coinbase is fighting for yields, because it makes their USDC more appealing to everybody. Because that's what they do mainly offer. Hi, Miles and CMF family. Good to see you, everybody. Let's go for facts news. Let's go, Carl. How you doing? How you been? Hello, Miles and CMF commenters. Good to see you. How you doing? Why can't banks also give yields on essentially, their own on the US dollars? Fair market, shouldn't it be? The reason why banks won't offer any sort of yields on stablecoins is not because they can't do it. They can, but they'll lose a tremendous amount of revenue, which they do want to do. Banks are greedy. Everybody knows this from day one. So they can offer it, but they won't because it will cut into their revenue tremendously. Screw the banks, move forward without the bank's approval. Moving forward without the bank's approval is an interesting, essentially, opposition, I would have to say. But the reality of it is, the banks have so much control over a lot of things, to be honest. The banks have too much control. So trying to move forward without them, I would love it. If we could move forward without the banks, why not? Uh, but it's just they have too much control. That's the main issue. But yeah, love the enthusiasm. Now, digital wallets is what we're going to talk about next, but it is a perspective from Franklin Templeton. So here it is. Digital wallets will hold totally, essentially, of people's assets, says Franklin Templeton. Now, we did just have essentially the Ondo essentially summit in New York. It was this big announcement on the Ondo summit. So many people were invited, so many speeches were made at the Ondo summit regarding the future of tokenization, and one of them was Franklin Templeton. So here it is. At the Ondo summit, essentially in New York, top asset managers said tokenization has moved beyond theory, but warned that trust, education, and real-world utility are now the biggest hurdles. New York, the next evolution of assets management will be wallet essentially native, not just digital, according to Franklin Templeton's essentially head of innovation, Sandy. Speaking at the Ondo Summit in New York, essentially on Tuesday, Sandy said she envisions a future where all essentially financial assets, stocks, bonds, funds, and more are held and managed through tokenized digital wallets. The total essentially of people's assets is going to be represented in these wallets, she said. The panel essentially, which included Cynthia Liu, essentially from Fidelity, Kim, essentially of the State from State Street, and Will Peck of Wisdom Tree, agreed that tokenization is no longer a theoretical concept. After years of slow progress, real infrastructure is now in place, and use cases are expanding beyond early experiments. But panelists also cautioned that building utility and trust is now the industry's biggest challenge. The idea of bringing an asset and representing it on chain with a token is the easiest part, said essentially Liu from head of digital assets from essentially Fidelity. The hardest part is building the ecosystem for utility. Despite recent growth, adoption essentially remains early. Now, essentially Hodgfield from State Street's global head of digital and cash said, much of the current work is focused on internal and client education. We're not yet seeing a rush to the door, Hodgfield essentially said. We've got to experiment and see what works in tokenization. That includes essentially explaining tokenization systematics and benefits. Hodgfield also pointed to the 2022 UK mini budget crisis, when traditional fund redemptions created a liquidity spiral. She argued tokenized funds could have essentially served as an instant collateral easing the disruptions inside the market space back in 2022 for the United Kingdom if we had tokenization in place. Here's your essentially perfect use case, she said. It suits money fund managers, collateral plungers, and regulators, and then everyone. Will Peck of Wisdom Tree said that client interest is growing, particularly from crypto native firms, managing stablecoin treasuries or seeking essentially yield bearing assets that stay on chain. He compared essentially today's tokenization with the launch of essentially ETFs 30 years ago. No one at the time was like, I want an ETF, Peck said. The ETF just worked better. The same pattern may now apply to tokenized products, with new universal liquidity layers forming on the blockchain essentially rails. Asset managers are preparing for a future of seamless global access and hyper-personalized portfolios. You're not even going to notice it, essentially said Sandy. It's going to be a seamless and smooth transaction. So Ondo Summit essentially happened in New York. Everything that came out of it was extremely positive. Franklin Templeton, essentially State Street, the list just goes on. The amount of CEOs and the amount of essentially hedge fund managers that were there discussing the idea of tokenization and what it could bring towards the table. The main concern was education. Apparently, a lot of people still not educated on the idea of tokenization, mainly to do with essentially regulations, and I'll explain why. Because crypto still is operating in some sort of a gray area, it's unknown territory. And when it's unknown territory, most people don't even bother looking into it when it comes to high profile essentially clients or so on. And that's the main reason essentially why a lot of people are not educated on the side of tokenization, because that was their whole main point. They said tokenization is brilliant. What it could bring towards the table is a tremendous amount of liquidity. We could stop essentially spiraling situations, something that happened back in the UK 2022, but there's just not enough people educated on the idea of tokenization. They said actually going on chain is so much easier than trying to educate someone on what tokenization is. But still positive, I would have to say that all these essentially hedge fund managers or CIOs are coming out and on those summit in New York saying positive things about tokenization. Just one negative, that there's not enough education around it, and that has to do with essential regulations. No gray areas equals to more people entering the crypto space, from essentially high profile client nets to essentially more hedge fund managers, more CEOs, and so on. Now, Trump is what we're going to talk about next on tonight's live. Before we talk about Trump, let's go inside the comment section first. Let's see what's happening there. As I said previously, this is live, just like always. If you do have any questions, go for inside the comment section. So let's see where we're at inside the comment section. Hi, Miles, the CMF family. Good to see everybody. Go for X News. Let's go. Carl, Comatose, good to see you. So how you doing? No, okay, we were here. Miles, what do you think of Ledger's plan to go public on the New York Stock Exchange soon? Regarding Ledger going public, it shows that they're willing to give away a piece of the pie, which means they're willing to, stick around, the easiest way to put it. When a company goes public, is because they're trying to raise money, which means they're desperate for money, in other words, and they want to stick around. They're willing to give a piece of the pie away so they can stick around. So in other words, BlackRock, Franklin Templeton, Goldman Sachs, BNY Mellon, and the list goes on, would start buying out their shares and essentially, being a part of the company in some sort of a way. I think it's a good idea for Ledger if they want to go public. They can raise a tremendous amount of money for themselves in the long term. It's definitely a company people essentially could look into. However, what will possibly change down the line is that if Ledger goes public, they will be pressured by their shareholders to change certain aspects in their company. So if you are somebody that is using Ledger essentially as a cold storage wallet, down the line, when Ledger goes public, when their shares are bought by big corporations, they will be pressured by their shareholders to change certain rules in the company. So keep your eye out on that, because the rules that they may change because of the pressure from their shareholders, it might be something that you don't want to be around for. So you might want to start looking into alternative, essentially wallets, is what I would say. Now, reasons why essentially Ripple doesn't want to go public now, because they have the money, they don't need the money, and they don't want to be pressured by shareholders to do something that they don't want to do. So, what happened to level playing field? Level playing field? There's no such thing as a level playing field when it comes to Wall Street. Hi, Miles. When is bull run? Johnny, good to see how you're doing, Johnny. consider variable change. Keep going down, Johnny, don't worry. As they said, by 2030, you will own nothing and will be happy. Bloody ETFs, which is true. They did say that, in the World Economic Forum, if anybody's ever seen it, was one of the biggest discussions regarding, you will own nothing and be happy. And I explained to everybody that why you would be happy is because, well, they'll tell you to smile and you have no choice. You'll get that when the time comes. Do you think this manipulation and sideways market could go into 2027 before we see some big moves? Just seems like it's never ending. Do I see this manipulation continuing to 2007? I'll be honest. I see manipulation continuing until 2060, if I'm being very honest with everybody, because manipulation will always be there. But the level of manipulation can be maintained. And what I mean by that is regulations. Regulations help a market space to, slow down the manipulation is the easiest way to put it. So do I think this level of manipulation is going to continue in 2027? I hope not, and I don't think so. I do believe we are going to get our regulations this year regarding the Clarity Act and the Stable Act. Essentially, the Genius Act will be updated the way it's supposed to be updated, essentially, to move forward. So I don't think we'll get this level of manipulation going to 2027, but manipulation will also essentially be around no matter what. It could just be maintained under regulations. And there is a lot of crypto exchanges, that might not want essentially, regulations, believe it or not, because, they can manipulate the market space. They are the house, to be fairly honest. If we have regulations, then it's going to get difficult for certain crypto exchanges to dump on the market space on specific days when the market needs to be stabilized. So when the market is downtrending a little bit because of some sort of a bad news, some crypto exchanges choose that particular day to dump on the market even further. If we have certain regulations in place, those crypto exchanges won't be able to do that and essentially feed on the backs of the retail section, because then they'll be penalized with a massive fine. But because we don't have regulations, they can do whatever the hell they want. So essentially, there are some crypto exchanges out there that might not even want regulations in place because they're loving the idea of essentially earning money on the back of the retail section. I'm not going to be naming those crypto exchanges that are doing that. Hello, CMF. How's my family today? Scott, good to see how you're doing. So if there is not enough education because of regulations, once regulations comes in, it will still take some time until adoption happens, so that institutions can catch up and become educated or not. Yes and no. So regarding regulations and the correlation between education, we get regulations this year. It wouldn't take essentially years for high net worth clients essentially to catch up to the idea of what tokenization is. In most cases, the majority of them know they just don't want to enter the crypto space essentially because it's such a gray area. So it wouldn't take months or years for them to learn. It'll take weeks for them to understand, what they need to understand. Because majority of them know they just don't want to enter into a essentially gray market space, gray area market space, because it leads to lawsuits down the line. Will any military action with Iran affect the markets poorly? Yes. War tends to affect the market space. Wars essentially tend to affect gold's price, silver's price, the Nasdaq, the Dow Jones, and also essentially the crypto space as well. So that's a guaranteed situation. However, with Iran's situation, it's an interesting twist because the last time Iran was threatened heavily by the United States, the crypto market space boomed instead of going downwards. Why did it boom? Because Iran's government was trying to push their money through the crypto space to wash it through. In fact, TRM Labs today on CoinDesk came out with a report that Iran has washed more than billions of dollars through a crypto exchange they built themselves. So with Iran's case, is an interesting scenario because they might essentially, push the crypto space up instead of down. Just depends on if they get scared enough from the US to wash more money through the crypto space. Let's see where we were at. Hi, Miles and CMF. Stormy, good to see you. How you doing? So is chance for decades, which is true, yes. Chance for bull run 2026? Yes, definitely chance. Miles, the best news I heard today on Bloomberg, and they were talking of BTC decoupling from the rest of the crypto space. That is incredible news, I'll be very honest. That is the best news we could possibly get. I've been talking about decoupling regarding Bitcoin and other crypto projects for like 2 years, I would have to say. I've been talking about decoupling, and I can't wait for that day to happen where we decouple from Bitcoin's footsteps. Decoupling equals to regulations and utility, which is the entire purpose of cryptocurrencies. So I know I'll be incredibly excited for that day, and I think everybody will be inside the crypto space where we no longer have to follow Bitcoin's footsteps up or down. As I described it in the past, it's like somebody's holding a TV remote, and when they press up, Bitcoin goes up, everything follows. When they press down, Bitcoin goes down, everything follows. But there'll be a day when that TV remote only works on Bitcoin and some crypto projects, not the entire market anymore, because we've decoupled, because we went to utility, because certain projects have contracts in place that Bitcoin doesn't. That's why the decoupling essentially happens. I'm stuck, credit card debit, and drowning. Johnny, don't worry, you'll survive. BTC does not really have any utility, just store of value, and people are losing interest, which is true. BTC doesn't really have any sort of, centric utility, you could say, but it does have that store of value scenario attached to it, and it's not going to go away by the looks of it. But yeah, it's true. A lot of people start to catch on to the idea that Bitcoin may be essentially, funding illegal operations, is what's being suggested on X due to the Epstein file situation. And that some people are stick to their stomach that they were funding essentially Bitcoin all these years when it was being used by Epstein and his friends for whatever they'd used it to purchase. Share the live. Let's go, Scott. Now, Trump's Fed pick, which we talked about on yesterday's live. Kevin Walsh, in other words. So there's news come out that essentially Trump's pick, Kevin Walsh, could shock the markets with 100 essentially percent rate cut this year. An economist has came out and said, economist essentially Robin Brooks expects the Walsh-led Fed to cut rates hard and fast, contradicting fears of slower easing. President Trump's essentially Fed nominee Kevin Walsh could cut interest rates hard and fast. An economist who essentially correctly called Japan's physical issues said essentially today, contradicting fears of slow so-called liquidity easing under the incoming chair. Robin Brooks, the senior fellow essentially in the Global Economy and Development Program at the Brooks essentially institution, predicts that a 100 basis point cut essentially over the 4 meetings in June, July, September, and October following Walsh's appointment, he said in his latest analysis today. This could be portrayed as a essentially reset of monetary policy to acknowledge a lower neutral rate and far exceeds the roughly 40 basis point in cuts that markets price over this period, setting the stage essentially for more dollar weakness, he added. Brooks essentially has consistently warned of a full-blown physical crisis in Japan for at least a year, with early signs of crisis emerging last month, as yields essentially on the nation's government borrowing costs surged to record highs. His latest essentially forecast means that the Fed's benchmark borrowing rate could drop to a 2.5 to 2.75% range from the current 3.5 to 3.75% before November's midterm elections. Chair essentially Jerome Powell term ends in May. Last month, Jerome Powell-led Fed held interest rates steady in the range of 3.5 to 3.75 basis after cutting by 75 basis points over the 3 previous meetings. Kevin Walsh, hawkish past as Fed governor, he clung to his anti-inflation stance through the 2008 and 2009 crisis, has scared markets into thinking rates won't fall easily under his presidency, setting up another clash between the central bank and the White House. Trump has repeatedly attacked Jerome Powell for not cutting rates aggressively to 1% and killing the American economy. The way markets have reacted since numerous essential of Walsh's presidency began circulating late Thursday reveals the anxiety. Bitcoin plunged from $84,500 Thursday to under $75,000 over the weekend. With hawkish Fed fears fueling major risk and inversion, gold and silver tanked by 9% and 26% on Friday, while the dollar index rose. Many came away from last week with the mistaken impression that Walsh will be hawkish. He can't and essentially won't be. In fact, his worst nightmare is probably to have Trump turn him on like he did on essentially Jerome Powell. Brooks noted. He expects Walsh to essentially cement a high productivity, low inflation narrative for lower rates, which is certainly possible as Walsh essentially sees the AI boom as a disflammatory essentially force that increases productivity and bolsters American competitiveness around the world. Productivity essentially improvements should drive significant increases in real time and take home wages. A one essential percentage point increase in annual productivity growth would double standards of living within a single generation, Walsh noted in essentially November 2025 Wall Street Journal opt title, The Federal Reserve's Broken Leadership. So, a lot of people are scared about Trump's pick, essentially regarding the person that's going to be essentially replacing Jerome Powell as the Fed chairman. They're afraid that he's going to be too unpredictable, just like Trump is. They're afraid that he might do, ridiculous rate cuts that could pressure the market space instead of easing inflation and so on. And they're saying that is adding more pressure towards a 24/7 market space, which is the crypto space. I'll be honest, Jerome Powell did a horrendous job. And as much as he comes out and says that he's not politically motivated when he does essentially these rate cuts or anything that he says, it's an absolute BS. We know for a fact that he is essentially politically motivated by a Democratic Party. What I don't understand is that Trump essentially, getting the votes he needed to become president. Why doesn't the Democratic Party just give him the benefit of the doubt and just let Trump be a president and do what he needs to do? Honestly, every president America gets, they give him a chance. Every party gives the next president a chance to do what he needs to do. When it comes to Trump, they always try to undermine him. They always try to essentially throw hurdles in his way. They always try to undo everything he does. Just let the guy lead the country. Just let him be president of the United States. He won the votes. He deserves to have a say. But the idea of always trying to undermine him, it just goes back and forward. And what that does is just ruins lives, American lives, essentially, rather than fixes them. This headbutting scenario needs to end, honestly, to be very honest. So just let Trump do what he needs to do. He got the votes, he became president. They didn't, he did. So let him do what he needs to do. Let him pick who he needs to do. And let's just see what he can bring towards the table. Rather than trying to undermine every footstep he takes in any sort of market space, that doesn't help anybody because it's just going to create a back and forward scenario. And I'll give you an example. The Democratic Party headbutting the Republican Party on crypto regulations. Why? Just let them do what they need to do. So let's just see what happens. If it fails, it fails. It's better than headbutting each other for 4 years and nothing gets done. Same scenario goes with Trump picking Kevin Walsh. Let's see what he brings towards the table. We don't know. Prejudging and headbutting each other for 4 years achieves absolutely nothing. Now, moving on from that to $9 billion is what we talk about next regarding essentially Bitcoin sale by a single Galaxy Digital client that didn't also help essentially the market space. Before we talk about that regarding Galaxy Digital and Mike Novoscott, let's go inside the comment section first and then see what's happening there, and then we go straight into the next news. Hit the like button. Let's go, Scott. Concerning that Iran is one of the only countries that doesn't have Rothschilds controlled banks, if they fall, I'm sure they will move in. How can this be good for crypto? Are we the bad guys? Regarding the Rothschilds not having control of Iran's central bank, true, they don't, as I said this a while ago. Regarding essentially the Rothschilds taking control of Iran's bank, who cares? I'll be very honest. Because what Iran's central bank is funding right now isn't rainbows and sunshines. What Iran's central bank is funding right now is terror groups around the entire world. So how could it be any worse with the Rothschilds taking over? I'll be very honest. It's not like Iran's central bank is handing out free samples of candy to everybody right now. They're funding terror groups. So it doesn't really make a difference who's controlling them. I'll be very honest at this point in time, because they're not doing a great job right now, are they? Is what I would have to say. They're treating their own people horrendously, and they're funding terror groups. And that's all coming from their central bank. So I'll be very honest. Don't think about it too much. And I can't wait for that day that they're removed, honestly. Regarding the Islamic Republic of Iran. I'm just counting the days that they're removed. Tap the likes, people. Let's go, Jason. If they don't know him, they will never get him. Trust me, Trump's not a dummy. I agree. Is 30,000 XRP enough? Yes, it's a credible amount to have. It doesn't ruin American lives. The American economy runs the world, and end of story. Let's go, JP. Will Bull Run be the dates? Will Bull Run be that dates of rate cutting? Oh, as in we have rate cuts and the bull run starts. It could have some sort of correlation. It just depends on how much the rate cut is and how the market reacts to that positive news in that moment in time. Regulations is what essentially keeps the markets up. Everything else, good news, gives the market some sort of momentum, and in some cases it doesn't because they're, according to Bitwise, is profit taking. That's why market doesn't move on good news. But look, good news gives the market some sort of momentum when it needs to. Rate cuts give the market some sort of momentum when it needs to. We don't want just a few days of momentum. We want utility, which is regulations. That is what's going to be the catalyst. Because utility means long running for 25, 30, 50, 100 years, in other words. That's what we need, not few days of momentum. I wish I have 30K, so I'll talk it, but I'm a long way. America gives the good news. Let's go, JP. Now, why a $9 billion Bitcoin sale by a single Galaxy clientele, essentially by a single Galaxy client, reinitiates essentially quantum threat debates. So not only do we have the Epstein situation weighing down on Bitcoin, but also we had news coming out today from the CEO of Galaxy Digital, Mike Novoscott, where he essentially noted that $9 billion exited because one particular clientele was scared about Bitcoin's future when it comes to quantum computing. CEO Mike Novoscott noted that this sale was a part of a profit-taking trend among early Bitcoin adopters, indicating weakening essentially conviction in the holding philosophy. $9 billion Bitcoin sale by a single Galaxy client reinitiates quantum debates. A Galaxy Digital essentially client sold $9 billion worth of Bitcoin last year, and quantum computing may have been the reason for it. The sale of CEO Mike Novoscott said during the company's Q4 2025 earnings call helped drag crypto markets as the position took time to unwind. It came from essentially a Satoshi era investor as an estate planning move. It's like distributing essentially an IPO, and prices usually goes down, then distribution ends and it goes back up, Mike Novoscott said. After revealing a single customer sold $9 billion worth of Bitcoin, I think that's the part of the cycle we're in right now. As essentially said earlier, I don't know when the seller's essentially exhaustion happens. That's not essentially much leverage in the system anymore. Mike Novoscott also implied that decisions to sell was a part of a broader wave of profit taking by early Bitcoin adopters that the company has been seeing. While the community has long championed holding through volatility, that conviction appears to be weakening. I'll be very honest. If you are somebody that's holding $9 billion in any crypto asset, if you're not selling, you must be crazy. $9 billion is retirement money for you and generations to come. So if you have $9 billion and you have that philosophy in your head of I'm going to be holding for eternity, is just stupid, I would have to say. $9 billion is incredible amount of wealth to have for you and your generations to come. So I could fully understand why someone would sell if they had $9 billion. While the sale isn't new and was reported last year, it was seen as a symbolic ignition, a debate among Bitcoin's OG holders today about losing faith. What caught everyone's attention now is the possibility that the reason was the risk posed by quantum computing to Bitcoin, and that's the main concern. So Mike Novoscott essentially, talking about the company's earnings in Q4 2005, where they discussed the idea of, they had one client essentially exiting from their portfolios, $9 billion and completely walking away. And their main concern was Bitcoin doesn't have a future because of quantum computing. And that's why that particular client sold his $9 billion Bitcoin portfolio, because he saw that going forward, quantum computing could take away his wealth. Novoscott called quantum computing threat the big excuse being used for the sale of Bitcoin. In other words, OG Bitcoin holders are using the big excuse of quantum computing threats to Bitcoin's future, and they're selling their positions. Essentially, the crypto industry, he said, has expected quantum technology to be a threat. And he isn't wrong. In recent times, the debate has been heating up. Investors and industry observers alike are now weighing the real threat of quantum breaking Bitcoin's encryption. While some say quantum computing technology is still a long way from becoming a reality, some developers have argued that as we get closer to quantum threats, the Bitcoin network will need to be upgraded to become quantum resistant. The risk, however, is that developers all get obstinate and essentially they fight amongst each other. Novoscott essentially said, although noting that that's an unlikely scenario, it really is an unlikely scenario. The idea that you're trying to get thousands of Bitcoin developers to agree on the same subject, it's going to be difficult. You can't get 100 people, you can't even get 10 people to agree on the most simplest subject, never mind thousands of people that have never met each other online, trying to essentially get them agree on how to essentially maintain Bitcoin's network in a quantum computing essentially resistant essentially world. So it's not far-fetched that they might not come to a conclusion in time that could damage Bitcoin's network going forward, and hence why OG Bitcoin holders from Satoshi's era are selling their Bitcoins and jumping out before the ship sinks, is what essentially is being suggested. I don't see that happening, he said, in the long run. Quantum will not be a big issue for crypto, Mike is saying. He said it will be a big issue for the world, but crypto and Bitcoin especially will be able to handle it. Quantum computing is the biggest threat to Bitcoin's network and to Ethereum's network. If you didn't know, now you know. There was essentially a discussion by the SEC on quantum resistance and quantum futures and cryptocurrencies. And the paper essentially reported that quantum computing's biggest threat towards the entire crypto sector is Bitcoin and Ethereum. Those are the two top chains to be affected by quantum computing. Are we extremely far from quantum computing? Is that going to be happening in the next 50 years? No. Google is getting very close. Microsoft is getting very close. China is getting very close. Russia is getting very close. The UK is getting very close. So is Canada. So is Australia. The list goes on. So is Japan. Every country you could pretty much think of, their tech labs, their tech companies are working on quantum computing chips. So, and they're all getting closer and closer day by day, I would have to say. So we're not 50 years away from quantum computing, I would have to say, maybe a year or two. So, still, the break from the idea that one should hold essentially onto their bitcoins forever, Mike Novoscott mentioned, could be rooted in something deeper than the market's current bearish trend. Cardano's founder, for example, Charles Hopkins, essentially has said in the past and highlighted Cardano's proactive push for quantum resistant upgrades. While early Bitcoin adopters like Adam Back essentially has pointed to ongoing R&D and secure cryptographic schemes for Bitcoin, to the CEO of Bitcoin technology firm Jan3, Samson essentially quantum would first be a threat to the banking industry. Still, Ethereum Foundation has just this month formally essentially evaluated post-quantum security to a strict priority with the creation of dedicated essentially post-quantum teams. Maybe essentially one of the bigger stories on the threat that had made a splash is that Coinbase has acknowledged that quantum computing could be real. Long-term threats to cryptocurrency markets, as sure algorithms essentially could break the signatures protecting private keys of Bitcoin addresses. Even Coinbase is coming out and finally saying, okay, maybe quantum computing can actually threat Bitcoin's network and damage essentially the security that it has. That would essentially allow bad actors to leverage quantum computers to access funds in any wallet whose public keys, often compared to an internal bank account number like an IBAN in crypto, are already exposed on the blockchain. Modern Bitcoin addresses and hash their essentially public keys, counseling essentially them until funds are spent on the blockchain. This means that essentially around 1/3 of Bitcoin supply is estimated to be under threat from quantum computers. 1/3 1/3 of Bitcoin's network is under threat from quantum computing. That is quite high. Another threat, essentially Grover's algorithm, could essentially outcompete the quantum computing, protecting the network and disrupting Bitcoin's economic and security model. The threat, however, isn't imminent. Current quantum computers aren't at 1,000 qubits. The unit is used to measure the power of quantum computers, while millions are estimated to be necessary to compromise Bitcoin's cryptography. The threat is nevertheless essentially producing real-world consequences for Bitcoin. Jefferies, global head of equities and strategy, Christopher Wood, last month removed a 10% allocation to Bitcoin from his model portfolio due to the threat of quantum computing possesses. That's major because it seems like institutions that had some sort of crypto portfolios are moving away from Bitcoin because of quantum computing threats. And one of them being essentially, Jeffries, the global head of digital strategies, Christopher Wood, last month revealed that their 10% allocation towards Bitcoin has been removed because they're scared of quantum computing. So people are jumping out of Bitcoin by the looks of it. Not everybody's jumping out, not every institution is jumping out, but some are jumping out because of the threat of quantum computing, and some are also jumping out because of the link between Jeffrey Epstein and Bitcoin. And obviously, some are jumping out because they have $9 billion. That's understandable. If you have $9 billion in any crypto, why are you holding should be the main question. Jump out. That's the dream for anybody inside the crypto space to have $9 billion. Now, Bitcoin will massive. Now, here's the thing. From one perspective, essentially, of these CEOs talking about quantum computing threats towards Bitcoin's network and that people are jumping out, CEOs are jumping out, they're removing their 10% allocations, to this. This is the opposite of what I just said. So that's essentially that's from 5 to 6 CEO perspectives of Bitcoin's quantum computing resistant issue. Now here's some other perspectives from the other side of the spectrum. Bitcoin will massively outperform gold over 10 years, says Pantera's essentially Dan Moorhead. I think crypto starts to become invisibly more part of everyone's lives, said Tom Lee. The two appeared on a panel together essentially today on the Ondo Summit in New York. We may be locked in a difficult market now, but long-term investors should be looking far ahead, according to Pantera Capital's CEO Dan Moorhead. In 10 years from now, Bitcoin will massively outperform gold. That's very obvious. Moorhead said during a panel with Bitmain, essentially, Chairman Tom Lee at the essentially Ondo Summit in New York City today, paper money is being debased at 3% every year. And that's essentially called stable money, said Moorhead. Now, over your lifetime, that's 90%, essentially, he continued. So it's totally rational to invest in something with a fixed quantity like gold or Bitcoin. While Bitcoin and gold have traded in cycles, Moorhead essentially noted that investors' attention tends to essentially reroute. Gold essentially got way ahead, but they do alternate back and forth, he said, adding that total ETF inflows into both assets have been roughly essentially equal over the past few years. And equally essentially bullish Tom Lee threw some shade on the 4-year cycle, which some believe is driving the current downtrend. I essentially don't think it's a 4-year cycle, he said, citing essentially diverging metrics like Ethereum's ETH essentially and rising activity and accelerated diverging that happened during October 2025 crypto crash. That was a bigger wipeout than November's 2022, Lee argued. Moorhead also said institutional exposure to crypto remains minimal. Despite recent developments, such as the launch of Bitcoin ETFs, all these $100 billion alt firms have zero Bitcoin or crypto. That's why I'm still so bullish, he said. You can't have a bubble when the median holding of institutional investors is literally 0.0. According to Moorhead, the reason that once kept large institutions away are disappearing. The list of reasons to say no to crypto used to be super long, which I agree. They're pretty much all crossed off. I agree again. He said, pointing to improving custodial options and regulatory clarity. Yes, there was a massive list of reasons to stay away from the crypto space. I do agree on that when it came to institutions a long time ago. But now things have definitely changed, and essentially people are in terms of institutions around the world are moving more towards the crypto space than ever before. He argued that blockchain's 80% annual returns over 12 years and its low correlation with stocks make it a rare asset class that offers both high growth and portfolio diversification. There has never been a better asset class in history. Lee argued that blockchain infrastructure is quietly becoming embedded inside the financial system. I think crypto starts to become invisibly more a part of everyone's lives, he said, pointing to stablecoins, tokenized assets, and crypto powered neobanks as examples. People may actually start to use crypto without realizing they're actually using crypto. As regulatory shifts, both speakers said the US is essentially at a turning point. It is essentially night and day to have clarity. Moorhead said, we're going from such an incredibly negative point to now, essentially, I would call it neutral, and hopefully the United States will soon be neutral. Looking ahead, Moorhead sees multiple catalysts, including a possible global arms race to acquire Bitcoin among both the US allies and advisories. Countries will realize, like China, it's super crazy to have 1,000 years of your life savings stored in an asset that Treasury Secretary Scott Benson can counsel that is crazy. It's way smarter to buy Bitcoin. Some things I agree with, some things I disagree with what Tom Lee has just said. The idea of essentially seeing Bitcoin as the only asset to have for your lifetime is stupid. I would have to say that. And one-on-one essentially investing. Anybody would say to you, anybody would say this to you in Wall Street, London Stock Exchange, the list goes on. That diversification is always 10 times better than putting all your eggs in one basket. Unless there are some scenarios where you would put all your eggs in one basket, mainly to do with essentially limited amount of funds, which is completely understandable. But if you do have limited amount of funds, putting it in Bitcoin is very, very stupid, I would have to say. It's not financial advice whatsoever. If you want to do that, it's your money, your choice, your life. But I would have to say, my own point of view, that is incredibly stupid to put it in Bitcoin if you do have limited funds. You're better off going for an alternative that has also an extremely big future ahead of itself with a with a low amount you can buy based on quantity and earn more over essentially your lifetime than you could do on Bitcoin. In other words, if you have $10,000 will go a long way in XRP based on essentially the contract size on XLM, XTC, HBAR, on the list goes on, rather than putting $10,000 in Bitcoin. It will do you absolutely nothing in the long run. If you're looking for about 2,000-3,000 profit, sure, why not? Over 5-10 years, why not if you want to do that? But $10,000 in XRP, in XLM, in XDC, in H1 on there will do you a lot better. Now, if you were going to put $10,000 in Bitcoin when Bitcoin was $1, sure, why not? But Bitcoin is not $1. It's far from $1. So I wouldn't do that in a million years. Now, moving on from that to Moscow. Before we talk about Russia, let's go to the comment section first. Let's see what's happening there, and then we'll go straight into the Russian news regarding the crypto space. So let's see where we're at. We were here, I think. As the previous, this is live, which means if you have any questions, go for inside the comment section. Let's see where we're at. Okay, we were here, I think. If you don't know, okay, no, we're here. Whales and institutions are doing well. The price manipulation will cause many to sell, that XRP will rise. I agree, Scott. It's going around that one day all we will need is 7 to 9 XRP to be wealthy. You told me utility. Facts. That's all that matters, I'll be honest, utility. You think 50,000 H bar is sufficient, Miles? 50,000 H bar is an incredible amount to have. 7 XRP, like the sound of that, I will be in good position. That will be good news. Let's go. I have little work to do to get more there, but close. I'm holding XRP. I might sell once the price goes up 90%, 95%. It will stay with me and within my family. Let's go, Scott. I've said multiple times, XLM is a sleeper. I agree. I'm still out on HBAR XTC as I hold a bag, but waiting. Okay, Scott. Hot, I am tired of waiting. I have been extremely patient. I see nothing that encourages me for the future. Regarding Hot, if you want to jump out of Hot, the alternative I would have to say would be CC, the ticker. CC, definitely look into it. And don't buy anything, obviously, as I always say, that you don't understand. But CC is looking like an interesting project. The ticker is CC's Caton Network. If you want to jump out of Hot to go towards CC, if you want to do that. Let's go XRP. Let's go Scott. Where is XRP party going to be held in CMF family? I can't wait for the party about the people. Let's go Scott. Let's go Miles. Share the live. Let's go Scott. Let's go XRP. Let's go Carl. Miles, what is your opinion on ADA? I have not heard you say a lot about it. Regarding ADA, I mean, the only positive thing about ADA is that, the ADA joining the XRP ledger, not ADA itself joining XRP ledger, but what they built, essentially the night and days thing that they built. It's the only positive thing I can say about ADA, regarding joining essentially the XRP ledger in a way. Is it okay to take my ledger and Tangent cold storage through passport control without them investigating it and asking what it is? Yes, you can take your Tangent, your ledger, or any other cold storage wallet devices you may have through passport control. Nobody's going to be questioning you, as far as I'm aware. I have no idea what's happening to XRP. Looks like we wait to 2027 for $3 again. No, I wouldn't say that. Because of it will change and be patient. That's good now jump in XRP. Yeah. Are we in a bear market in your opinion? And when do you see a parabolic rise? Regarding a bear market, it's outcome that's been suggested for a while. I wouldn't agree with that fully, and I haven't still either, because there's too much manipulation. A bear market is essentially introduced when the cycle essentially ends, when the 4 year cycles essentially end, we go into a bear market essentially. But we're not going through the same cycles to be having that bull market, the bear. In other words, Bitcoin going up because of the halving, Bitcoin coming down, feeding into Ethereum, Ethereum going up, feeding into altcoins. And that is the cycles that we normally have in that 4 year cycle of bear market, bull market. But we don't have those cycles anymore. So describing what we're in so as a bear market is not your that's not what you're suggesting. This is just what I'm saying. But describing what we're in right now as a bear market I wouldn't agree with that in any sort of way. What we're stuck in right now is just a very, very manipulated geopolitical tension market space, is the best way to describe it. This market space is extremely manipulated right now, with essentially crypto exchanges dumping on the market space whenever they want to, with essentially the geopolitical tensions that are going on in the Middle East, with the Fed situation essentially being replaced, and some people are uncertain about what the next movements of the Fed's going to be, with essentially Donald Trump's pick, with the regulations keep on going back and forward between the Republican Party and Democratic Party. This is not a bear market. This is just a very manipulated, essentially, market space right now, where some people want regulations, some people don't want regulations, some people love the idea of the Wild West inside the crypto space. We have war scenarios happening. There's so much happening. It's not a bear market. It's just extremely manipulated right now. Regarding a parabolic rise, also, I would have to say, regulations. We need a Clarity Act. Certain crypto projects have clarity, but institutions and essentially mega corporations, not just in the United States, even around the world, they don't have the clarity they need. As the example that I give, XRP has clarity, 100%, because the long battle lawsuit it went through, but the institutions don't. And now that there's a CFTC or the SEC, which, by the way, the CFTC and SEC are apparently having their own conversations because they're tired of the Republicans and Democratic Party just going against each other on everything. They're trying to move forward in some sort of way. But Parabolic Rise Clarity Act, because institutions don't have clarity. Some crypto projects have clarity, Bitcoin, Ethereum, XRP, but technically XRP is the only one that actually has clarity. But institutions don't, which means if they do try to maneuver, they're maneuvering in a gray area. That's a good, okay. I want to say. So we'll see the parabolic rise with some sort of regulations in place. So 7 million BTC are a threat then. Lol, that's why Ripple already working on content competing threats. Facts, they are. Peg, I agree. XRP, let's go. Miles, maybe Satoshi Nakamoto is also working on protecting the Bitcoin wallets. Lol. Maybe he is. Maybe Satoshi Nakamoto is working on protecting that. Don't be late. Don't be late. Load your bags. Let's go. Peg. XRP, XLM, XDC, and HPRO. Let's go. Scott. I am backing up the wagon. Let's go. Scott. XRP, XLM, XDC, Ondo, AVAX. Let's go. Carl. I agree with all of that. Share the live. Leave a comments. Hit the like button. Let's go. Scott. Miles, CMF, good evening. Shop now. Let's go. Davey, how you doing, brother? Facts, I agree. I began to look at CC as our conversation last night. Thanks, family. No problem, Scott. Anytime. I brought a big bag of cat on this week then too. Let's go, Stormy. 4-year cycles about to be dead. Utility will rise with regulations incoming. Facts. Let's go, Davey. Absolute facts. Miles, do you think nowadays it is important to get into trading education? Yes and no. Trading isn't for everybody. Trading is for people that have money to play around with. Trading is some sort of gambling, you could say. It's not fully, and some traders might disagree with what I would have to say. There's a lot of that goes into trading. Charting essentially is one of them, being aware of the news 24/7 because we are in a 24/7 market space, psychological as well. Trading does, have that psychological factor in it where what is the maturity about to do inside the market space? Because you could draw your lines on the chart and expect it to go one way, and when it doesn't play out, it's because the market decided to go the other way. So trading is good for people that have money to play around with. It's not for everybody. And you could lose a tremendous amount of money when you're trading. And you can gain a tremendous amount of money as well. It could go either way, but it's very high risk. And you should be confident with the amount of money that you put in the middle to play around with. Sometimes you could see what's about to happen, and sometimes it's like playing on a roulette table. I think, Miles, do you think? No, okay. I think the 4-year cycles are becoming obsolete. I agree. Yes. Utility will decouple from Bitcoin once regulations hit. Facts, absolutely. I lie numbers, but trading seems complex to me, so I have no interest in trading and futures. Good. Futures is even more risky than spot trading. Now, Moscow, Russia. Moscow's exchange is about to add XRP, Solana, and TRX futures contracts to their crypto derivatives lineup. So, new contracts will be based on indices for each token settled in rubles, essentially Russian rubles, and accessible only to qualified investors. A Russian exchange is about to add XRP, Solana, and TRX, essentially Tron, to their platform. The exchange will first introduce indices for their 3 altcoins before rolling out futures contracts settled in Russian rubles. Maria, the senior manager of the derivatives market group at MOEX, said Russia's RBC radio that exchange will first introduce indices for 3 altcoins, which will serve as the foundation for rolling out futures contracts. Under Russian essentially regulations, derivatives must be tied to an underlying asset, and in this case, the asset will be published index for each token. MOEX essentially already calculates indices for Bitcoin and Ethereum and offers monthly cash settled futures tied to these essentially benchmarks. The new products will follow the same model, featuring no physical delivery of crypto settlements and RUBs and only accessible to qualified investors. The exchange is also eyeing essentially futures contracts for Bitcoin and Ether, allowing investors to enter futures positions with no expiry. These futures contracts are essentially already popular in cryptocurrency spaces and are offered by most global, essentially major exchanges. Russia has been working on crypto regulations over the past essentially few months. Last month, lawmakers in the country unveiled plans to cap retail crypto buys at $4,000 and earlier. The central bank outlined a new framework for crypto investors, and still the country's ongoing conflicts with Ukraine has been weighing in on the sector, given the sanctions imposed on the country's River, Russia's largest essentially crypto miner, was sanctioned by the United States in 2022 over the invasion, essentially on Ukraine situation. Russia has also labeled the crypto exchange Whitebit as undesirable over its support for Ukraine. So, Russian exchange is about to be listing XRP, Solana, and Tron in terms of futures contracts. That's going to add liquidity, down the line. It shows, I'll be very honest, it's quite positive because Russian exchanges don't offer too much services due to the sanctions they're battling due to the Ukraine-Russian war. So the only crypto exchanges that they are going to be offering is very limited, but that just means that more liquidity will be heading towards those crypto assets entirely. And again, it is only offered to high net worth essentially individuals. It's not offered to everybody in Russia, but still positive news for these particular assets: XRP, Solana, and Tron. Now, on the topic essentially of Ripple. And then on the topic of essentially the discussions the House is having regarding crypto regulations, which is everything we need inside crypto space, Ripple joins key White House summit to discuss stablecoin regulations. Ripple joined a group of major blockchain companies and traditional financial institutions at the key White House summit. The meeting, which focused essentially on stablecoin regulations, discussions centered on the essentially controversial topic of stablecoin yields and rewards, a major issue stalling current market structure legislations, which is what we discussed a bit earlier on tonight's live regarding, Coinbase saying, let's get those yields in, Brad saying, let's just get it over with. Representatives from major crypto companies, including Ripple, Coinbase, Tether, and Kraken, participated in a closed door summit. Traditional financial players such as Fidelity and SoFi also essentially attended the meetings. Both groups were joined by banking lobbyists and policy experts aiming to address the regulatory framework surrounding stablecoins. The 2-hour session focused on the risk and opportunities presented by stablecoins and yield offerings. While banks view yields as a threat to regulated deposits, crypto companies see it as an essential tool for innovation. We are farming the discussion so both sides understand the boundaries, said one insider. The meeting reportedly had a constructive atmosphere with no major conflicts arising. Ripple's representatives joined others in pushing for the regulations of stablecoin yields as well. The company, along with other crypto firms, argued that banning stablecoin yields would stifle innovation and limit consumer benefits. Patrick Witt, executive director and the president council of advisors for digital assets, expressed confidence that progress has been made on other regulatory challenges. Brendan, a reporter at the meeting, observed that there was a noticeable difference in essentially approaches of crypto and banking representatives. Crypto participants came prepared for specific essential solutions, while banks essentially avoided discussing detailed strategies. Despite the differences, both sides agreed on the need to address stablecoin yields in a regulatory framework. The debate over stablecoin yields reflects a broader concern about the future of essentially digital currencies and financial regulations. Stablecoins issuers face the challenge of offering yield while remaining compliant with existing regulations. For banks, the issue is critical because they fear unregulated yield products could essentially siphon deposits from regulated institutions. As the White House summit ended, Witt expressed optimism about the resolving of stablecoin yield issues. We have seen breakthroughs on other difficult essential policies and matters, and I believe we will reach an agreement on this too. It's good that they're saying they're going to reach an agreement. I'll be very honest. In my point of view, the banks are battling a losing battle because even if they get the Stablecoin Act to essentially alternate and change the yield situation on stablecoins, and that crypto companies can't offer these types of yields on stablecoins, they can't do the exact same thing to the DeFi space because there will be DeFi platforms that will be offering you some sort of yields. So it's a losing battle. But sure, more people, a lot of people wouldn't be confident in using the DeFi space, especially if they're new towards the crypto space, to be using some sort of DeFi places to earn yields. But it's something that they can't fully control. The banks are fighting for something they cannot fully control. They can maintain it within that circle of Ripple, Circle, Coinbase, Kraken, and Crypto.com. But beyond that circle, they can't really control yield scenarios. So they're just fighting for a very small circle just to, hang on by their two fingers. But the good news is, seems like they're going to be coming to a conclusion very, very soon, which is what we want, I'll be very honest. So, on that note, we have reached the endings of tonight's live. This was the CMF live show, stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m., London time onwards. In this live show, we talk about cryptocurrency news, CBDC news, AI news, political news, and regulation news. Everything you should know about regarding the world completely transforming into digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. On tonight's live, we talked about essentially Ripple, Circle, Coinbase, and so on, having conversations with bankers regarding stablecoin regulations. We talked about Russia essentially introducing XRP, Solana, and Tron to their essentially customers customer base. We talked about also regarding the matters of Bitcoin. Essentially, it's 10 years ahead where it's going to be sitting at from the speeches from the Ondo Summit. We talked about a perspective from Mike Novoscott, Galaxy Digital, regarding Bitcoin and quantum computing once again. We also talked about on tonight's live regarding the matters of Trump and his Fed pick and what the uncertainty around it is from different perspectives. We also talked about essentially Franklin Templeton talking about tokenization, and the education of tokenization is that we're not that far off from tokenization in general, again from the Ondo essentially summit. We also went through news regarding Canada's investments in terms of essentially regulations and policies for crypto space. We also talked about tonight's live regarding Bitwise and the House finally voting to keep the government open. So before we go, essentially, as always, let's go inside the comment section, and then we'll go straight, and then we will call it a night and essentially regroup tomorrow at 10 p.m. London time onwards. So let's see where we're at inside the comment section. We were here. Thanks, Miles, for sharing your opinion about trading. Don't worry, I'm not a gambler. Let's go, Carl. I don't have the time for optimization for tables either. Fair enough. XRP is being added everywhere. We are slowly seeing where the end days will be probably in place all the time. Let's go XRP. Let's go Scott. Is XRD dead, Miles? If you're still holding XRD, maybe you want to shift over to CC, I would have to say. I prefer to invest in XRP than investing in trading. Let's go. Good night, everyone. Davey, see you tomorrow, sometimes as usual, brother. Thanks, Miles. Good night, CMF. Let's go, Stormy. See you tomorrow, sometimes as usual. Great live, Miles. Thank you. Good night, Miles and CMF. See you tomorrow night. Jason, see you tomorrow night, sometimes as usual as well. Great to have you back, Miles. Excellent live, as always. See you tomorrow, same time. Thank you so much, Artistic, for the kind words, and I'll see you tomorrow, same time as usual. Thanks, Miles. Good night. Let's go, Comatose, and see you tomorrow, same time as usual as well. Thank you a ton, Miles, for all the news updates. Have a lovely night all. Let's go, Lena. See you tomorrow, same time as usual as well. Banks have been lobbying for hundreds of years, so in that sense, they will win the argument for the Clarity Act. Let's go, Funky. Thanks, Miles, for the great news. Have a good night to you and CMFC tomorrow. Free and forever. See you tomorrow, sometimes as usual as well. Great live, Miles. Thank you. See you tomorrow, Mike. See you tomorrow, brother. Same time as usual. Good night, Miles, and see you tomorrow night. Thanks for a great night. Let's go, Funky. See you tomorrow, same time as usual as well. Investments such as real estate, stocks, and cryptos are good sectors where you know what you're doing. Diversifying your portfolio is important and mitigating losses during periods of inflation. I agree, Cole. Thanks, Miles. See you tomorrow, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Great job tonight, Miles. Let's go, Scott. See you tomorrow, same time as usual. See you tomorrow, Miles. Peg. See you tomorrow, same time as usual. Thanks, Miles. Another great evening. See you tomorrow night. Let's go, Addy. See you tomorrow, same time as usual. Thanks, Miles, for this amazing live show. Good night, my friend. Isn't you a message on Telegram at X? Carl, I'll check it out. So sorry about that. Thanks, Miles. Good night, brother. Let's go to see you tomorrow, same time as usual. Share the live and comments outside the live. Let's go, Scott. Facts. If you haven't, CMF members, liked or retweeted this live show, please like and retweet this live show if you're watching this on X. If you have liked and retweeted, thank you so much to every single one of you. If you watch us on YouTube and you like the live show as well, thank you so much. If you haven't, CMF members, like, retweet, follow, subscribe if you already haven't. If you have, thank you so much. I love you all. See you all tomorrow, same time as usual, for episode 434